Hey guys, what's up? It's been a long time. So I was doing this market review slash backtesting, and I was like, why not just hop on and record the video and share my knowledge or ideas that I was having towards last week Monday. Normally, I'm working towards a period where I'm working on becoming very, very disciplined. So I'm trying to see if I'm going to avoid Monday trading just to have a feel or see where is the market sentiment at. So, but it doesn't take away the fact that when you are practicing or backtesting or whatever, you should exclude Monday. So I'm gonna be practicing. Like today is basically Monday. That's why I'm not even in the market looking at the charts. So I'm just focused on backtesting today and doing other reviews and studying and other stuff. So I was like, why not just come share my thoughts and ideas in the market? So I've already started a few things, but let's just let's just make some things easier to see. So yep. I miss you guys, man. I miss sharing my videos here on Facebook on YouTube. I miss that. Okay, so we are looking at Monday, and you guys will see have the benefit to see how I backtest. So this is like my backtest and learn on. I used Notion, so this is how I backtest. So you guys will have the benefit to see how I do it, the internal dialogue, everything, how I go through practicing and studying ICT concepts. So we have so here what am I trying to see? This is the Mondays. Let us assume that let us forget this first. Let's forget all this price action here and just focus on this side. Okay. So you see that here, what have we seen? What did we do on Friday? We took out the sell side liquidity on Friday, rejected back. Then the next morning, by the time we're opening the chart, we're going to see this gap, the close from here and the opening from here is what we call the new week opening gap. Um I just I'm gonna try to be audible enough so that the you can hear me properly. So this is the new week opening gap. So I'll take note of that. And where do I want to see price reach to? Honestly speaking, if I wasn't looking at this side through hindsight, I'll be looking at the rejection block of the candle and the daily CB. That was going to be the daily goal or the target intraday target. So go to the 15 minutes time frame. All right. Mm, so this is where I was before. I was like, oh, why not just share this? Why not just share these ideas with my audience? So what have I seen here? This is the sell side liquidity from the daily time frame. Then what we doing? What did we do here? We still cleared out sell side here again. Price cleared sell side, traded to this fair value gap, traded lower. Then this is a fair value gap. We trade above it. Then it acts as an inversion fair value gap. Now what is this? This is a breakaway gap. You see the half of it is staying open and we keep trading higher. Now this is the new week opening gap. This is when price forms the new week opening gap. This is where price closed on Friday and we open on Sunday. Okay, so take note that I'm using the New York time to give my analysis. My time is always on New York. Okay, just to clear that so that you can understand. So this is where we close on Friday, 4:55 and 4:55, and this is where we open on Sunday, 8 o'clock. So the distance between that is what ICT dubs at the new week opening gap. Now this is what we're seeing. So where would my eye jump to? We are looking for this place, right? The daily rejection block, possibly sell buy side. Then if it has the strength to trade into this CB, that's what we'll be looking at, right? But we have to look at intraday price action as well. So now if you notice here, what is this? This is 15 minutes in volume imbalance. You can see there is an imbalance here and price trades here first time, trades away from it. And what is this again? A very little tiny CB. So we'll go to 5 minutes and you'll see why that is marked out. You probably see it in the 1 minute, but let's still go to the 5 minutes. Okay, first of all, right now, if I'm doing a market review, I would just be showing you, but because of I'm back testing as well as journaling, this is purely raw. I haven't really even roughly analyzed the market on my own, done my internal dialogues. Like earlier, I told you that I was going to be doing some internal dialogue. I haven't done any of that. So this is just raw, uncensored. This is uncensored. Okay. So, so what I'm going to do now is I'm going to take a screenshot of this. I'm going to take a screenshot of this and it's going to be on my, what the hell? This is craziness on TradingView. This never happens. It's loading. Okay, I don't have time for this. Okay, it's up. Is it? No, it's still loading. Let's just do it myself. Okay, there's no time. It needs to be fast. I'm recording. TradingView has no clue I'm recording. Damn. So this is a breakaway gap. So basically, we didn't want like we've been going lower, right? We've been going lower, weak price action, then we start moving and expansion higher. Now we do not. This is a breakaway gap because we do not trade to the up to consequent encroachment of the gap. So and we kept on going higher. So that's a breakaway gap. This shows order flow. It shows that the order flow is bullish, and we might want to tag onto this position, onto this rejection block, right? Now, after the breakaway gap, what have we created? We have created a new week opening gap and a gap higher. So, do we want to see it come back down here? No, that means we are not as bullish as we think. So, this is why it is a breakaway gap. All right, yeah. So, the thing is, okay, let's leave that for now. Okay, so I like that. I like that. So, I want to make it. I want to screenshot this, then come and log it on to my. So this was the backtest I've done for last week, or last 2 weeks rather. So you see, this is the only stuff I've done. I was working on. I was like, okay, I think I need to share this anyways. Let me just share how I do it and the process and everything. So now I'm looking at this volume imbalance. So we're gonna go to the 5 minutes time frame now. Okay, let's clear this out. Trust me, guys, I really haven't done nothing here. Nothing crazy. I want to clear this. So now, this is the 5 minutes. So we gap higher, breakaway gap, breakaway gap, breakaway gap. We can walk off. Sorry, guys. Gap higher, breakaway gap, breakaway gap, breakaway gap. Walk off this higher breakaway gap. Not touching this. We go higher. Then now we can throw in the sessions. So this is what I use. So I'm trading anywhere from 9:30 to 12 p.m. Okay, so anywhere from that is where I'm trading. We can trade this, but preferably this this time window is very, very good to me, or for me rather. So now you can see I already slapped on my midnight open and 8:30 open. So the best buys are going to occur under the midnight open and the 8:30 open, and the best sells will occur above the midnight open or the 8:30 open, right? But remember now, in the 15 minutes time frame, remember this was a volume imbalance. It's still a volume imbalance here on the 5 minutes. You see, it's still a volume imbalance on the 5 minutes, but it's not really a CB on the 5 minutes for the CB. And as you can see, it almost felt like it's a balanced price range on the CB for the 5 minutes. Probably that's why we didn't get a buy up there. And coming to think of it, this was actually a trade I took. I was stopped. I was stopped out because I entered too quick, and that was mostly because of I did not follow my rule. I did not stick to my rule. This is why you need to. I was trying, anyways. I would have. I take responsibility for not sticking to my rule, anyways. But it was a situation whereby I was trying something that I had learned, but I have not perfected it. And I just recently learned that last week from a guy I watch on YouTube. He's an ICT trader as well. He trades ICT Concept and is very good. So he was showing his own backtest and stuff. And but then he talked about something. Excuse me, guys. He talked about you, like when you learn something, you don't need to implement it into the markets, into your trading yet until you have probably mastered or perfected it or had an idea. And that is something I failed to do. So I actually learned that and I was like, oh, that's true. That's possibly why some stuff haven't really gone in the direction I want, because of once I learned something and I feel like, okay, I have an idea of what it is, I want to start implementing it. No, you can keep doing what works for you while you master and perfect what you are trying to learn or what you have just recently learned. So now, as you can see on the 5 minutes, what do we do? What do we do on the 5 minutes? We clear out sell side. Sorry, we clear out buy side, going higher at 9:30 open. Price goes higher. We are supposed to do what? Treat this as a Judas swing. Except price shows us a reason that he wants to keep going higher and take out this rejection block. But if not, if it doesn't, then what do? We treat this as a Judas swing. Then we come back and do what? At least clear out sell side from here and possibly London sell side. And we do that exactly and trade into the midnight open. Now, trading into the midnight open is a very strong premium or discount array depending on the market condition. If you are above it, is a strong. If you are above the market, that midnight opening gap is a strong discount array. If you are below the market, is a strong premium array, depending on the position of the market and the bias, the general bias of where is market going to. You understand? So it's something you need to have in mind. Then this is sell side liquidity. So what do? We trade to the volume imbalance, trade away, and trade below the 8:30 open, trade below the midnight open, take out clear sell side just by a little, but we do tag, we do tag sell side, as you can see, just by a minuscule, but that's enough. That's enough in some situations. And where do we run to our targets? The daily rejection block. We are not able to reach either the buy side. I didn't even mark the buy side up, but we're not able to reach the buy side or the CB, so the rejection block. Now, this is why you need to put the rejection block into consideration. Mostly when you see it, when you see the wick. What is the rejection block? The rejection block for buy side is the highest is the highest closing candle. That is the rejection block for when you're on buy side, and when you're on sell side is the lowest closing candle. So that is that, guys. I don't want to make this stuff long-winded, so I'm gonna record this now. What record the significant things I see leading to price getting here. 9:30, we trade higher, trade to the volume imbalance. You can see the bodies. You can see the bodies, guys. The bodies are just closing at this point, but the wick is doing the damage, right? Yeah. So I'm gonna screenshot this. I gotta get used to this anyways, because I think I'm not used to this. That's why normally I do even more annotation than this, but not being used to this and trying not to make my videos long-winded, which I think I'm gonna stop putting too much emphasis on trying to not to make my videos long-winded. I know that I take time to study, I take time to really learn this craft, like sometimes sleepless nights. So if I'm out here doing this, I'm doing it because of I love doing it. I'm not even trying to do it to please nobody. Like I want to only attract someone that really wants to learn. Like you cannot learn how to do this with a 5 minutes video. I don't think it's possible. What I would just learn to do is to be faster with it, to be more to direct and more to the point, but I would not learn to hurry. I do not need to hurry it. Just more direct, more to the point, and faster at it, becoming super efficient. All right. So that is that. So when I say I do not want it to be long winded, don't think I'm trying to be fast, or I don't want to contradict myself, but don't think I'm trying to like just hurry for no fucking good reason. So yeah, guys. So this is basically what I see. This the market is the price action is this is a volume imbalance, but we break it out away, and the market here is just on the 5 minutes anyways, but on the 1 minute it's sweeter and cleaner. So remember, I said I did trade that. So I think that's why you see all those things there. I did trade that. Um, okay, yeah. So for these markers, so this red delineates my London session. I don't ever trade London session, but as I use it for a framework, but I don't trade the London session, at least not yet. This is the PM session. I don't trade the PM session as well, but I'm studying it. I'm observing the PM session. So the only session I trade is this. I have traded the PM session sometimes, but I'm not a master at it. I will just put it that way. Like based on understanding the market conditions and the requirements of or expected stuffs. So now let's just hop to the 1 minute when things gets pretty interesting. So now what did we see? What have we seen so far? We've seen the low that London has made. We've seen the high that London has made. We've cleared the London buy side. Okay. Sometimes, not all the time, but sometimes after we clear London buy side, we tend to clear the sell side. Not all the time. Mm. And on average, it happens s- from average on an average of 50 to 60% of the time it happens after we clear buy side here, we can clear sell side. At the time I was back testing it, there was a particular week that it happened every day that week. After we cleared buy side, we cleared sell side. It doesn't always happen, but it's pretty consistent. So sometimes if it's not able to clear the sell side, it can still trade to this place. That's the high of the London. That is another strong PDRA. It just acts like your um like retail support and the resistance. These levels can sometimes act as that. Okay, just sometimes, like I said, like if it doesn't have the willingness to come and clear here, it can sometimes trade into it or even enter that level, then start going higher. So that's going to be on a day where the market is super bullish, then it won't. Like on this day, it didn't. Maybe it did trade here probably because of the market wasn't as bullish as we were. Because if we were as bullish as we were, we're supposed to trade into this place, and if we're going to trade into this place, it won't have the time to come clear here out and still move there. So these are just one of the things you need to note. Now, 9:30, we trade high, displace, imbalance, breakaway gap. You should stay open. Now, when you see your breakaway gap stay open, what can you do? If you have a target higher above wherever your target is, you can go using this. This is another block, and we trade to the high of the other block to the tick, and we trade higher, come back again, then trade higher. Okay, but I wasn't chasing any of this because I knew what this is a Judas swing. We open, trade below, and trade higher. Except I see reason why we want to keep going higher. What I wanted to see was us even trade lower. Then I can look for a setup to frame myself going higher. But we we went higher instead, and I had to just be patient and wait. Now, as you can see here, there is really nothing much exciting here apart from the only thing that stood out for me was this imbalance. Okay, so I'm gonna draw that out. But I wasn't looking at the imbalance to buy. That was the crazy thing. I wasn't looking at the imbalance to buy, but rather to sell. Oh god, trading view at it again. Man, trading view is messing up today. I'm telling you. Like I had before this recording, I'd had to refresh my trading view like 2 times, and it still is messing up, man. The hell. Today of all days, Monday. You didn't do this on the weekend. It's Monday. It's doing this. Whatever, man. Who go old school? I didn't even know about saving of templates until when? Until early this year. So now this is an inversion fair value gap. Okay. Oh man, this is why I love my templates. Everything is already saved the way I want it. Hmm. Okay. Okay. So this is an inversion fair value gap. So now, how did I miss this trade? So good, very good question. I had to ask myself that question. So normally, an inversion fair value gap, you need to wait for a close. If you're going to use this as an inversion fair value gap, You need to wait for a close outside the mark, outside the gap, then you can buy the retracement into the gap. You can be here, you can wait for consequent encroachment. Sometimes it won't give you consequent encroachment. So just to be good, you can buy it here and put your stop loss above is a good PDRA, basically. So now, when we have traded to this, I know that this is a volume imbalance, is a good PDRA. We trade to it, trade back into it, clearing what buy side again, trade back into it, trade clear sell side, clear buy side, then we move close above the the volume imbalance. Sorry, close above the inversion fair value gap. Then we trade into it once more and sell. So this was how it's supposed to be. This is how I do trade. But now I've been learning how to, like, okay, sometimes you can anticipate the fair value IFVG and you just go low even before the closes because of you anticipating for this IFVG too. So this is something I was learning, but I think I have just it works, but I haven't just fully understood that concept properly, and I just went to act upon it, which is not disciplined enough for me. So I went short here, took me out. Then when I saw this, I was like, no, for sure. I didn't wait for the close. You have to wait for the close. I didn't wait for the close. I was like, no way, for sure. We are in this right now, and I'm not going to move. I'm not trying to miss this move. So it was more, I don't know, even know I should. Yeah, I think it's FOMO. I'm going to accept that. It was probably FOMO. I'd lost one, then lost two. But after I lost two, I'd used all my bullets. Like, I usually take only two trades a day. I would only take a third trade. This is part of my role. It's not me being, I would only take a third trade if I see something really good and I'm going to go with half the risk. If I see something really good and I'm like, okay, I just think I need to recoup my losses and I'm good for the day. I'm not even trying to revenge trades to win back or more. Just if I get half the thing, recoup my losses, commissions, and I'm good. So when this happened, I was like, oh, we're selling now. I sold somewhere around here, stop high. I can't really remember. I think my stop is probably going to be at somewhere around this other block, higher than the other block. Boom, I get stopped out again. Then finally, we break. You see now, we have broken lower. So this should have just been the only buy I'm taking. Buy, oh sorry, the only sell I'm taking. Sell. Then my short was going to be above here because of, I think we do have a breaker. So we have a high, a low, and sorry, a low, a high, and a lower low. So I could have used this. Now this is where you can anticipate the breaker because now we have closed. This is supposed to be where the breaker starts from, but it's too low. So a high, a low, a high, a lower low. That's your breaker. Where would your stop be? Just above the breaker. You can put it to upper just for the fair value gap. And where can you aim? You can aim from here, but obviously you're going to take partials from here, and you can decide to either take partials at the midnight open or the sell side. But and in a situation where the oh man, sorry about that, guys. Trading view be tripping. And in a situation where it is close, this is another thing I've noticed. In a situation where sell side is so close to um the midnight open, please take it at the midnight open. Please take it at midnight open. The only time you'll be aiming for sell side is when maybe sell side is above the midnight open. You can still aim for midnight open because it's a good draw. It's just like a new, it's just like it's just like a new week opening up. It's a magnet to price because price wants to give, they want to give you at a very good discount. So it's a magnet to price. So you can be taking anywhere around there because sometimes if they want to attack this later in the day, they can just straight to the midnight open, just a tick, and start going higher. So you should always, but with more practice, you will know the one that works best for you. But so this will have been the trade. Okay, you buy, you can take partials here or here, whichever suits you, and you hold. Obviously, managing your stop loss because this is a breakaway gap. This is a gap we can trade into here, but we want to see this open. Why? This is bearish order flow. We want to see it open. Okay, high, low, higher, high. We never trade to the breaker, so we want to see this open because of the displacement, and then eventually we get it here. So then from here, remember, our target was where here, but it doesn't mean if you have the right context or the right narrative or the right bias, or if you just know generally know what the hell you're doing in the market, you know what you're doing, you can always easily take short scalps, but you know it's short term. So that's why you have to take partials, because what can we do? We can actually come here, trade here, take out sell side, and we keep running. But when we do that, then we know that yeah, we're really, really bullish, and we eventually we're gonna trade onto this CB, because that was like the ultimate target. But we haven't still been able to do that till today, even a week later. So that is that for today's market review. And I'm gonna, well, I do more than this anyways. If I'm gonna just show you some of my I do more than, I think it's because of I'm talking and I'm trying to manage talking and doing all these things. I will just show you one, like an example of one of my, so you know that I do more work than this, like more serious work and internal dialogues than this. And I'm not done logging this. So obviously when I cut this video, I'm going to go back to it. But this is the one I did for like 7th of November. So you can see this is an NFP Tuesday. Oh, okay, the NFP day itself. So you see like serious annotations. Even the breakers, I annotate them. So it's something I'm still going to go work on. So this is just basically how I do it. So let me show you one more example. So this is how I go by. Let's see. Okay, I have this as fifth because I did the work I did here was intense. I used 3 hours. So if we're gonna stay and like I really want to do my annotations and back testing, I used like 3 hours on just this one, on just this day. The price action was really sweet here. So I did so much work, so much journaling. But I'm just doing it this way because of its recording, and I don't want to take too much time, like I said, but it's work in progress. At some point, I'm really gonna have to put so much time, even in my videos. Like if you can watch it, that's fine. You can go learn somewhere else. So right now, I'm just sharing my journey, showing you what this shit means to me. So this is like a whole lot of work. Like a whole lot of work went into all this. So yeah, and I have a couple more. So if I'm to load more, so this is one, and I still do have. This is just a few, man. So you could do something like this. Sometimes I just say this is for my trading journal. This is my trading journal. This one is not in use yet. This is my 2.0. This is an upgraded version of the trading journal, but I haven't just put myself to switch because of the whole data in this place. This is what we just opened. This is weekly review. I think this was when I was still trading forex. Anyways, I was doing like a weekly review. It's almost like this. It's almost similar to the backtest arena, but I really haven't used this in a minute. So then this is, I'm not going to open this one because this is my study journal. I'm not going to open it. It just has like the people I learned from ICT and somebody else. I'm going to review him, but for now, he's my gem. He's my gemstone. I'm keeping him so tight. I think only two of my friends know who the person is. Well, yeah, that is that. Anyways, so guys, thanks for tuning in. I hope this brings value to you. Until I touch base with you guys, be safe.